Good morning, folks, and welcome back to Almus Market Mornings. Usually, after the Fed meeting, the next day we see good amount of market reactions, especially if there's some sort of a change that's happened, which markets were not expecting. Yesterday was also quite similar. The markets interpreted Fed statement as quite hawkish, and this coincided with the signing of the US-Iran MOU. Overall, dollar index has seen a good amount of strength. Euro has fallen below 1.15 against the dollar. We have seen good amount of selling in precious metals, while the rupee has been trading on the stronger side, ignoring the dollar index strength for now. Let's go about this theme with JK. Good morning, sir. So dollar index, we have broken above 100.5, which was seen as a significant level. Do you see a good broad dollar strength emerging from here?
Good morning, Swaraj. Yes, I think dollar is the topic. So, you know, dollar had been ranging for quite some time, and we have been mentioning it over and over again that it's still all the moves are within the range, and 100 was broadly capping it, and 98 was on the lower side. Um, Now, the background of this was that people were expecting the US rates possibly to uh, go lower at some point of time, because the last FOMC meeting dot plot indicated that there will be one rate cut this year. And also, the employment situation was somewhat softening. Uh, so all these, and of course, the ever-present dollar de-dollarization, and the diversification was also playing out, and that has played out for quite some time now, almost nearly a year now. And so the dollar had consolidated at the lower level. And so what happened that it changed. Now, first of all, the FOMC day before yesterday uh, came out quite hawkish. Although there was no forward guidance saying that they are closer to hiking rate or anything, any statement, but the dot plot indicated, 9 of the members looking for at least one rate cut, a rate hike this year. One actually saw two rate hikes this year. So, and now market is discounting one rate hike in September and possibly one more in October or December. So two rate hikes are being discounted. Another other factor is the job market has stabilized. Last 3 months reports, we have seen the job creations as per the NFP have been quite strong. Unemployment rate is holding at 4.3%. And then, despite, job cuts being higher, it is confined to some sectors, and then in some sectors, jobs are still growing. That's another positive fact. US economy is growing much steadily, at a higher level than other peer major economies. We have seen UK posting a negative growth last quarter. Japan and Europe are not very far. They are also very tepid growth is what is seen. Now, more than everything, we've seen US assets performing exceedingly well. The particularly the uh, tech and the AI sector equities have given fabulous returns. And now add to that, the short-term yields in the US for the 2 year is now quoting almost 50 basis points higher than the median Fed funds rate, which is at 3.6%. So, and we are at 4.112 in the 2 year. So, money, once again, money has started to move back to the US. And, with the oil price falling, there is doubt about how many more countries would be hiking rates further, at least in the next meeting, unless the broad-based inflation is seen. But in US, there is a broad-based rise in inflation, even if you strip out the oil-related or headline inflation. So I think all these reasons have suddenly seen the investors, flocking to the US dollar and US assets. That's what is driven the dollar above 100, and clearly above 100.50. And the last hurdle was at 100.80. Even that has been cleared now. We are at 100.85. And we have, for quite some time now, if you look at the way the dollar's weakness panned out in the last 2 years, it was the gold that was leading dollar's weakness. Gold was being bought across and had rallied more than 100% in the last 2 years. And now that is also fallen almost 25, more than 25% from its peak. So all across, you can see that there is a preference to sell many other currencies and buy the dollar, including the what is considered as safe haven gold. And that is translated into strong dollar in the last few days. And now with the technical level of 100.8 being broken, I think we can project a level at 103. That's about 2% for the dollar index. We can see for key level for the euro on the downside stays at 1.14, not very far from there. We're at 1.14, and we are now at 1.1450. And look at dollar yen. Last time dollar yen hit 160.70, Bank of Japan intervened massively, reportedly spent 74 billion, went down to something like 155, and then we are now at 161.30, and no word from Bank of Japan. The reason being that now the yen is weakening, not on a standalone basis, but also across the board, dollar strength is seen, and along with that, yen is also weakening. So that's another factor which is adding to the dollar index strength. And the Chinese yuan, which had stood out by strengthening in the last 6 to 7 months and gained more than 3.5%, is also now weakened from around 6.75 levels to now 6.79 levels. So all in all, good reasons why investors want to get back into the USD. It has consolidated for a long time at the lower level, and the breakout is drawing in more buying support for the dollar. So that's the picture. So we can see some more strength across the board for the dollar, unless we see some a more clear statement from Warsh. So that is one more factor I failed to mention. See, many people initially had a view that Kevin Warsh is going to be dovish, and possibly he is appointed by Trump because Trump wants him to cut rates. But none of that was seen in his statement or the press conference. And again, the market is now veering to the view that he will probably incline more for a hike. So these are the factors strongly in support of the dollar, which is quite strongly rallied in the last few days. Now come to the other side of the story, Rupee outperforming. What's happened in the last 20 months is that ever since October 2024, I remember, the dollar has been rallying against the INR, and INR has lost against most other currencies as well. Which means that the dollar index actually fell for some time and then gradually recouped. But overall rise in the dollar against other currencies was much lower, around 5 to 6%, whereas against the rupee, the dollar had risen almost 15% since October 2024. This year it has risen about 7.5%, since the war about 6%. So there's a massive rise and total underperformance by INR, with capital flows missing. And the war brought in another factor of higher oil price, current account deficit, and BOP deficits in focus of the investors. So all this led to INR grossly underperforming and the rupee getting undervalued by almost as much as 10%. Now what is happening is we have had the war coming, war situation easing substantially with an interim agreement between US and Iran. From a peak of 126, the Brent has fallen to 78, which is about a 40% drop in the price, substantially easing pressure on the Indian economy, which relies heavily on imported crude. And then, of course, just 10 days back, we had the government in RBI announcing massive measures to attract more capital flows into the US, and which has already started. So now we are in a situation where rupee is seeing good amount of inflows, even as the dollar index is rising with selling across the board from other currencies. So naturally, you can see the rupee is outperforming. Yesterday's was a clear-cut case where the dollar index was rising above 100.50. Dollar rupee was hitting a new cycle low at 94.20. And to make it more significant, we have yet we are just starting to see the flows come in. And as we get more flows, rupees outperformance can become even more stark. So these are the two interesting stories that we are seeing on the currency market. Of course, stocks recovered well in US from the sell-off that was seen after the Fed meeting. Once again, it's lopsided because it's all the tech sector rally, AI sector rally that is seen, and of course Dow also gained because of the oil price falling. So we now coming back to the rupee, whether how far it can strengthen is purely dependent on what RBI does. Yesterday, reportedly, RBI was buying at the lower levels, but I'm sure when there are very large flows hitting the market, they also let the rupee gradually strengthen. So I think we are in a situation where rupee could post good gains against whichever currencies they had lost against in the last several months, and that's the phase we are in. Be long of the rupee for now. And yes, one more factor that can come into play is that exporters who have been on the sidelines are also now hedging more. So that's how we are ending the week, a stronger rupee and a stronger dollar. Thank you.
Thank you, JK. And yes, dollar index after consolidating, I think for over a year now, has started breaking out higher, and that's how sort of we are ending this week's theme, and maybe begin the next few weeks with this trend emerging. Uh, a break above 100.8 is technically significant, and that sort of should drive the dollar index higher. And we are seeing dollar strengthen across asset classes. Where we have, of course, against the Asian pairs, the major currency pairs, and now you have it strengthen against gold and silver, the precious metals as well, which has lost out significantly. The rupee, of course, at this point of time, it seems immune. We have already seen a large amount of weakness in rupee due to missing capital flows and oil prices, both of which have sort of eased in the recent times, and we are seeing sort of rupee normalize, and that's why there is a bit of a divergence as compared to global markets. So, dollar index is strengthening, but rupee it remains quite stable and on the stronger side. Uh, so we'll see how all of this plays out. That's it from us today. Thank you for listening. Have a great weekend. We'll catch up on Monday with a fresh round of updates.